And you can see how the market has just been inside of this upward sloping channel for a long I mean, definitely the sell-off was caused by the fear about this new variant, this COVID variant. Although, again, the market tends to kind of sell first, ask questions later. We're seeing a little bit of a snapback in the markets here this morning. But there's no doubt that the markets, to me, continue to be kind of built on a house of cards, where it's in a situation where we know the Fed is starting to taper. We know inflation is high. There's a lot of negatives out there, potential slowdowns in the economy. But you're going on kind of what we were discussing earlier, which was prior to the start of this interview, which is that greater fool theory, which is investors are still willing to put money in because they think the markets will just always go up. And that is always very, very concerning to me. Again, for me, I just look at the charts, right? And if I show the charts here, check this out. Absolutely amazing channel on the S&P 500 here, period of time. And if you look closely, just prior to the sell-off, which was on Friday, we kind of just got up right to that upper trend line.
Just
we did it over here,
line, didn't we? Yeah.
Yeah. And so it was almost as if it was destined to come because the charts were up at that upper range. And it, again, did we know that the new variant was going to be the cause? No. But again, the market has a history. Every time it gets up here, it just somehow pulls back. And again, amazing how technicals work like that. Again, you could never guess in a million years this new variant would just pop up and freak people out. But the charts were telling you something was coming.
And I suppose people get hypersensitive when we see things coming towards the top of the channel line like that. And that if we get any sort of negative news, they may overreact to it.
Yeah, I think that's what it tells you. The upper range of the channel tells you that the markets are overbought. I'm sure there are bigger investors out there that are aware of that. And they're very, like you're saying, hypersensitive to anything coming out, which they're saying, okay, well, we know the technicals are telling us a pullback. This must be it. So let's just dump it all here. And it creates this kind of momentum shift to the downside, at least in the short term. I would wonder again is, at some point you have to figure we go back to the low end of that channel. I don't know if this is the start of it, but that would take us substantially over 10% lower if we reach the lower end of that channel from the recent highs. So, I mean, you definitely have this thing. And the other thing to keep in mind, I still remember this vividly 2 weeks ago, whether it was social media or whether it was the talking heads in the media, everyone was predicting this end of year Santa Claus rally. And if there's one thing I've learned in my career, it's when everyone is predicting something, it usually doesn't come to pass. And here we are, going into December with a nice little sell-off. Same thing happened in Bitcoin. It was breaking 65,000, the April 2021 high. Everyone said 100,000 within a month. Didn't happen. Here we are 2 months later almost, and we're down in the mid 50,000 range. So it tends to be a contrarian indicator when everyone is predicting something.
And so you're saying that it'd be about a 10% correction before we even test the bottom of that channel. Which is a significant correction from where we are now. And then you're probably, you're looking for kind of a confirmation of a trend change. So we've got significant move on the downside before we can actually start to talk about a change in the trend here. Is that what you're suggesting?
Yeah, I mean, there really is, right? So here, if we go back to the S&P 500, if you look at the risk versus reward on this chart, the risk is that you go back, let's say you wanted to short the market or bet that it's going down. The risk is that you go back to this trend line, which isn't that far away, right? Especially with the futures here up about almost 1% in the pre-market. The reward on being short is all the way down to this lower trend line. When again, you could see if you zoom out, you did hit it a couple times prior. You hit it over here and over here, but really it hasn't been hit in a long time, which again makes me think that there's more of a likelihood we are getting close to that corrective move because no one expects it, right? You could say, all right, we haven't hit that in forever and no one's thinking it will happen. And then it finally does go. So I think that that's what you got to keep in mind. The risk reward favors the downside here. But like you're saying, a change in trend for me, if we were to break out of this channel to the downside, I think that's what would have to happen. And then I think you say, okay, we're entering a potential bear market. But if we go down to this lower trend line, you would then actually be a buyer of the S&P until it breaks. And then you'd likely get another bounce off of it. I don't know if you'd go as high as the upper end of the channel, but you certainly at least could go up a decent amount, which would make a decent amount of money there.
At which stage the risk reward then is to be long.
Absolutely. Long with a stop of a break of that lower channel trend line. Absolutely.
If you're wrong, you'll find out relatively quickly.
Yeah, and you can react quickly since you're buying it right off of that line. If it goes below, let's say even stays below for a couple of days to confirm, then you would say, okay, it broke, change in trend, potential bear market, exit, small loss.
And I'm assuming then that we're looking at S&P. This still maps over to the Dow and the Nasdaq as well.
Absolutely. So the NASDAQ, which had this amazing run and pierced the upper range of the channel, but the same channel exists here on the NASDAQ 100. You can see, again, the interesting thing with the NASDAQ is that it's tended to hit the lower trend line more often, more so because there's more volatile swings in tech stocks, right? So you get these bigger, massive moves. So you can see right here, you were at the top, you went to the low end, you kind of bounced halfway, tested the low end, then you went to the high, low, low again, high, low. And then here you could see this was kind of max greed up here, where the trend line for the first time, 2 times in a row pierced, but the trend line is so powerful that it just dragged or took the NASDAQ 100 back below after piercing. And again, you can see how we've come back down. So the same thing kind of applies. Your risk on being short is that it goes up here again, resistance. Your reward is all the way down to about 365 on the QQQ, which is about a 30-point drop from here. And again, if it broke, you'd buy that line, just like over here. I mean, look at the buy on that. That was an incredible buy.
Yeah.
You'd buy there. And again, if it breaks, you exit real quick. If not, you have a potential for quite the move back up. And the upward channel is still intact as long as you don't break this lower trend line.
And you can probably expect as well with that move in October there in the NASDAQ, it was just over a month it took from the lower end of the channel line to the upper end of the channel. Whereas the move before took a couple of months. So you probably saw a significant degree of being overbought in the NASDAQ at the upper end of that channel in comparison to the rally, but the previous rally.
Yeah, absolutely. You saw so the rally from the October to November pierce of the low line to the upper trend line there, that was so fast. I mean, it's so rare to see, but I think it shows you how much investors were just waiting for that dip, that buy the dip mentality to just charge right in. And then they just chased these stocks up. I mean, we saw the Rivian move where it went from like $100 to $175 in a matter of days. I mean, just incredible zeal for buying stocks at levels and just thinking they're going to be able to sell it to someone else higher. Now, what's concerning is Rivian actually came all the way back in very, very quickly. So there were no doubt institutions that were looking to unload their positions very, very quickly, which again is concerning, right? I mean, it's one thing when you see GameStop rally up,